Good morning, everyone. My name is Barry Hildred. I'm the CEO of Aquila Resources. I want to thank you for attending our presentation. I hope everybody's having a good virtual conference. Aquila is a development stage company with gold-rich projects in the upper Midwest of the United States. Specifically, we're focused on the Penokean VMS belt, which spans the upper peninsula of Michigan down through northern Wisconsin. The belt has 24 known mineral occurrences, and we think it's a real new district opportunity in the United States. Our flagship project is called Back 40. It does reside in the state of Michigan. We're well advanced through permitting. We have to date received 4 required permits to build and operate the mine. And we do think that Back 40 will be an opportunity as a hub with synergies with our other assets in the region. We have a strong shareholder base. Orion Mine Finance, Ruffer, and Hud Bay own better than 50% of our shares. And we do have a gold stream with the Cisco Gold Royalties. We think we are valued attractive relative to our peer group. We're trading at about $15 per ounce on a gold equivalent basis versus a pure median of closer to $60 an ounce, and trading at a multiple to NAV of 0.3 times versus a pure median of 0.5. We don't think we're getting any associated value with not only the upside of Back 40, Back 40 is open at depth. We have the opportunity for additional exploration opportunity. It is a VMS deposit. They do tend to occur in clusters. And we also have 2 earlier stage exploration assets on the same Penokean Belt, but located in the state of Wisconsin. Just quickly, our capital structure, 339 million shares outstanding, leads to a market cap close to $50 million. At the end of June, we had a cash balance of about $4 million US. The next slide just shows a map of our location. So that shaded area in the middle shows the Penokean VMS belt. Again, we own Back 40, Bend, and Reef. Those are the 3 assets we own on the belt currently. Back 40 being more advanced, Bend and Reef being earlier stage exploration assets. We think this whole area is having a bit of a mining resurgence. Both Michigan and Wisconsin have recently passed new mining laws. Michigan back in 2005, 2006. They've permitted 3 projects under those new mining laws, including the Eagle Mine, which went into production in 2014, is owned by Lundin. Wisconsin passed their new mining laws just back in 2017. In December, they passed what's called the Mining for America Act, and do want to see mining investment come back to northern Wisconsin. So a little bit about Back 40. We did recently publish a PEA. This was in the last month. The PEA was a follow-on to a feasibility study we did back in 2018 on the open pit portion of the project. So Back 40 is an open pit mine that will be followed in the future by an underground operation. So the PEA incorporated the known underground to date. The economics were robust. NPV was 176 million on an after-tax basis, leading to an IRR of 26%. At the time we published the PEA, we did a spot analysis. Gold was trading at $1,998 an ounce gold, and zinc was $1.04 a pound. That led to 316 million US NPV and closer to 38% IRR. That spot analysis would be very consistent with where we're at today. In fact, the numbers would be a little bit better given zinc trading this morning right around $1.15. Some of the differences between the feasibility study we did in 2018 and the recent PEA is we did reduce the throughput in the sulfide plant from 4,000 tons per day to 2,800 tons per day. That was better to align with the mining rate in the underground. We increased our mine life from 7 to 12 years, and we reduced the CapEx from 294 million to 250 million in the PEA. This is a slide that just shows some of the production highlights from our PEA plan. You can see in the bottom right pie chart, if you look at gross revenue by metal, gross revenue from gold was 45%, zinc was 38%. That chart to the left of that pie just shows sensitivity to gold price. And you can see projects very sensitive to the price of gold. And once you get above $1,800 an ounce on the gold price, more than 50% of the gross revenue is coming from gold. In the early years, we do produce a lot of gold, 107,000 ounces in year one, 206,000 ounces on a gold equivalent basis. The mineral resource contained metal, about 1.1 million ounces of gold, 1.2 billion pounds of zinc, about 18 million tons between the open pit and the underground, and 94% of the resource is in the measured and indicated category. We think grade is important. If you compare us to our peer group, our grade on a gold equivalent basis at Back 40 is 4.3. So certainly at the high end of the range as it relates to gold grade. It's just a 3D model of the ore body itself. That gray shaded area is the permitted open pit. And you can see there are two lobes coming out of the bottom of the pit that are moving southwest. And again, just expanding on that story of the opportunities at depth for this ore body, limb 2, which is at 700 meters, you can see we still have very good grades. LK 484, we have 31 meters of better than 6 grams gold, and LK 479, we had 70 meters better than a gram per ton of gold. So this is a project, as we drill it, it continues to give more. Permitting status, again, 5 permits required. We do have the 4 permits we applied for back in 2015, our mine permit, air, our surface water discharge permit, and our wetlands permit. We are just in process on our dam safety permit, and we're expecting to submit that application this quarter and expect to receive that permit in the middle of next year. Just focusing on some of the other assets on the belt, again, we're very excited about the Penokean Belt, the opportunities for consolidating other assets on the belt. There are 24 known mineral occurrences. We do think we have first mover advantage on the belt. And Bend and Reef are in very close proximity to Back 40. Bend is 130 miles away. Reef is 85 miles away. And the Penokean Belt ranks second after Flin Flon in contained resources amongst these early Proterozoic VMS belts. So Bend, a little bit on Bend, again, 100% owned by Aquila. There was some historic drilling done at the site. It is non-43-101 compliant, but it did delineate a resource of better than 4 million tons with good copper and gold grades. Our plans for Bend moving forward is to conduct a drill program this winter that will support at a later date a 43-101 compliant resource estimate. Bend is on federal land. It's on BLM property. And so the permitting process will be a little bit different than what we face at Back 40 and also at Reef. Reef, again, 100% owned by Aquila. It has also had some historic drilling by Inco, Noranda, many years ago. It delineated a resource of 455,000 tons with a gold grade of better than 10 grams. Again, this is a non-43-101 compliant resource, and our plan for Reef is, again, to do a drill program as recent as this winter, and that will further support a 43-101 compliant resource estimate. Some of the catalysts we're focused on, again, just recently put out the PEA. There is some more drilling to be done at Back 40, geotech, some infill in the underground, converting some of the resource tonnage into the measured and indicated category, and then we'll look to do some step-out drilling to add tons at depth. That will lead to a resource update, which will support a feasibility study update in 2021. At the same time, in parallel, we'll do some exploration drilling at our Wisconsin assets, and we'll continue to focus on advancing pre-construction activities at Back 40. And our long-term value proposition for the company is our focus is to become a de-risked multi-asset portfolio in a new U.S. district with many years of mine life. And if we accomplish that, it will lead to many strategic options for the company in the future. I think that's all my time. Thanks everyone for attending and watching our presentation, and hope everyone has a good conference.